All right, it was an ugly day in the stock market, not unexpected as I wrote about in my blog, drduru.com/122. I did not think that this latest oversold period could last just one day. What you're looking at here is my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages. And I like to call it AT50 for above the 50. Here's the oversold line at 20%. You can see here, let me make it more obvious, that we had a one-day oversold event last week. We hit oversold to start trading this month, and we dropped even further to 15.5%. We haven't been this oversold since, you guessed it, the October lows, the infamous October lows of last year, a year ago, almost a year ago. So that means we're in pretty extreme territory. Let's just take a quick look at some other indicators to see, because I think there's actually a dilemma here. Yes, certain indicators are oversold, but we may not have quite seen the last shoe to drop. Here's the VIX. The VIX is doing what we want it to do, which is spiking higher. It's now made a new high. And in fact, I will change this now to say breakout. And oh, look at that. Let's see, that close was 20. Wow, just barely got over this close. So we are now at a 6-month high. So that's good. I know that sounds weird to say that's good, but let me go ahead and change the text here. So we're at a 6-month high, which means that the VIX has made a higher high, which means we are more extreme than the last oversold period. That's what I want to see to convince me to come in and start doing some buying. Let's take a quick look at the indices. So S&P 500, you can see that this line here is where I drew the beginning of what I call the summer of loving, the start of the summer of loving stocks. The S&P 500 is almost completely reversed all the gains from the summer. You can see how this was defined by a nice breakout, and it lasted for all of about 2 months. It peaked out in July with this fake rally here in late August. So this seems like a natural point for the extremes to hit, and that could be a buying point right here, start of summer of loving stocks. The small caps too are getting to where they're at an extreme point. You can see that they're at essentially at the lows of the year, and the lows of the year coincide with the pre-pandemic high for small caps. So this is pretty extreme. This looks like a good point to buy. So that could happen as soon as Wednesday or Thursday. Now, the holdout has been the NASDAQ, and the NASDAQ is still pretty lofty, but while it's broken down below its pre-Jackson Hole high from last year, the danger here is that it could re-enter a bear market. So this bear market is 20% below the previous all-time high, not the previous high. And that, again, looks like a point of natural buying. So you can see here that we have a lot of indicators that are converging at natural points to buy for extreme moves. Now, my dilemma, if you want to call it that, is a stock like Nvidia. Nvidia was rallying all the way up until yesterday and hit this 50-day moving average resistance. Now, if this resistance is real and it's going to hold, it means Nvidia has at least a few more days of selling down. And during those few days of selling down, I cannot imagine the market will stay resilient enough to hang in there with this resistance holding strong. So let's go over to Swing Trade Bot. For those of you who have watched these videos before, you know I'm a subscriber. Some of the things I show here may not, you may not be able to do on the free version. Let's go straight to the scans. And let's see, yes, end of day scans. I just want to see, just for giggles, how many stocks actually held their 50-day moving average support. Oh, look at that. That's 51. Not too bad. 51 strong charts. But let's see what some of them look like. I'm just going to do a sample. I'm clicking as charts. I'm going to filter out anything that's below 10. And let's just see if we can find at least one good looking stock to put on the buy list for an oversold bounce. Again, I'm going to go through this really quickly. I'm going to skip through the categories that I don't like, which are financials, energy, and energy. Oh, look at that. Zscaler. ZS is a potential. But there's a lot of chop here, so it would only be good for very quick trade, but this is good support sitting here. So I like adding Zscaler to my list. So that's one. Let's see if we can find one more. And that's a REIT, biotech. I'm also going to skip through the biotech. Intel is a favorite of mine in terms of buying between earnings, but this looks pretty tenuous. You know what? I like Intel. I'm going to add it to the watch list for my bullish swing watch list. So now I just need to find one more. And energy, GNK, RGA, financials, blah, da, da. Actually, I'm seeing some charts that actually look a lot better than I thought I would find. Oh, darn, that's WR Berkeley is also financial services. I don't like that. Energy. I think you're seeing a theme here where a lot of energy, healthcare, biotech, and financial services holding 50-day moving averages. That shows you where the strength is in this market. I'm trying to find just one more stock to fill in my coffers to look for. And oh my goodness, this is so dominated by the sectors that I do not want to trade in right now. Come on, let's find one. Floor, finally. Okay. Now, this is a troubled company in previous years, so I'm a little nervous adding this. Fluor Corporation is a big infrastructure company, but of course, infrastructure is big. So I'm going to go ahead and add that to the list. And let's see what happens. So again, Nvidia is my big wild card. I'm going to be watching this for signs of a flush out. On the fundamental side, remember, we have the jobs report on Friday. That could change a lot of things too. And we have the currency markets that are throwing things for a loop. Let me show you some examples. Here's the US dollar versus the Canadian dollar is zipped out. I'm going to have to write about this because it's burst through this high. The dollar is just so strong. Let's take a look at against the euro. You can see here it's at its low point. Actually, it's lower than its lowest point of the year, and so on. So I think you get the point. Things don't look good, but they're getting extreme. Oh, of course. And I almost forgot. TLT, which is the ETF for the bond 20 plus year bonds. You could see this big spike in volume. I heard today on CNBC that TLT had its highest volume in its history. Again, that is another extreme measure. So now I'm looking for a washout with bonds. In case you haven't been watching, this decline in TLT represents a decline in bond prices, which represents a spike in yields. And these higher yields are really killing a lot of stocks and a lot of enthusiasm for the stock market. So let's see what happens. Check my blog out, drduru.com/122. I'll have an update by the weekend on how the oversold conditions pan out. See you then.